3, 2, 1.
Here we go!
Wall Street Bets. The story centers around one man dubbed Deep Fucking Value. In the course of one day, this Redditor went from ordinary basement dweller to King Midas, blessing any underwater stock he touches and sending it to the moon. Now, the day trading fervor for the average unemployed American is on the rise. Today, we're here with BTCVIX, a longtime professional trader who simultaneously runs the Wall Street Bets Telegram group, to talk all about what people are calling Occupy Wall Street 2.0. Vix, tell us a bit about your background, and let's get started.
Well, I mean, the background definitely has to start on the crypto side. So, I was a long-time crypto person, but the Wall Street Bets community has been, it's very tied into crypto, I feel like, because they're always about memes and kind of meme warfare and such like that. And I think this is just a situation where memes became reality. It doesn't surprise me that the Wall Street Bets community ended up being the one that really did it and had a moment probably larger than even any of the crypto side did.
Yeah, some are saying that the Wall Street Bets is the battle where, Bitcoin and cryptocurrency will ultimately be the frontier where the war is held. And so I wasn't actually interested in stocks at all until this entire meme stock thing emerged. So maybe we can go through the order of events, because what happened was only a week ago, really, last Wednesday, and now we're talking at the time of this recording, which is on Wednesday, and it all came to a head really when Elon basically tweeted Gamestonks, and he shared a link directly to one of Deep Value's posts, which was about his options calls on GME. And Deep fucking Value had been on Wall Street Bets for some time now, right? At least a year. And he had been posting regularly, almost on a weekly basis, talking about his calls and his subsequent gains. But it really didn't get the traction that it needed until just Elon, the meme king, tweeted about it. And then suddenly everyone started looking into it, and they all simultaneously just hive-minded and went and bought GameStop at unprecedented rates. Everyone who is unemployed, who invested part of their stimulus checks into a bet that they felt like they didn't really have anything to lose. And so, boom, on Wednesday, it all came to a head, and suddenly a $8 billion hedge fund, Melvin Capital, got caught with its pants down. So I want to talk about that, because there's so much to unpack there with this whole thing. We want to talk about the meme stock phenomenon and what it means. And we also want to break down the sort of financial mechanics that kind of broke down on that day to help our listeners better understand the technical aspects of it. So
Sure. So, we'll first start out with the fact that, we have to basically start out right at the top, is the fact that these hedge funds have been taking out more than 100% shorts on a bunch of these stocks, which they're not supposed to be able to do. So they're being over-hypothecated on numerous stocks that they're allowed to short more than they should be. And that is exactly what happened. They got caught with their pants down, and a meme that basically blew up on Reddit took, I think the last call was over 50% of the capital of Melvin hedge fund. So that's pretty substantial. It's definitely a win for the little guy. I do think a little bit, not to be too narrative based, I do think some other hedge funds probably smell blood in the water, and when 1,000 little guys jump on a big guy, the big guy over there looks like, well, we can go hit this guy too and take some money from him too. So I think they came in and took a couple of shots at him too. So, but the bigger thing is, right, Wall Street plays by different rules, and we're finding that out not just on this side where they basically could short more than what they should have, but then they even get the special treatment of Citadel and the other market maker firms basically telling them, like, we have to stop trading and stop buys and stop all that stuff. So I think that only feeds into this narrative that, Occupy Wall Street wasn't enough. This was the attempt at bankrupting Wall Street. Maybe I should be a little bit more positive saying I wish it went that far, but it was at least an attempt at that. But it also exposes why they just stopped us, right? They just, not us, but anybody that had any volition that these were not good people. And I mean, suddenly maybe it's just my bias. I think, well, in crypto, they couldn't have stopped us. So, yeah.
Right. It seems that everybody instantaneously got red pilled overnight, essentially.
Yeah. Yeah, no, that's exactly what happened.
Yeah, because, what happens when you're just a retail investor? You just, maybe had enough money to buy one GME, and then suddenly all the major brokerages like E-Trade, NASDAQ, and even Robinhood, which we'll get to in a little bit, just suspends trading, or at least suspends buying of the stock. And not only that, but I remember I was watching Robinhood and trying to get in, because I was part of that YOLO mob. And I was trying to buy some GME call options. And then it turned out that Robinhood just suspended buys. And not only that, the next morning when markets opened up, they closed all of the contracts that were wanting to buy at They closed the contracts at a lower price than the market value, and so they artificially created sell demand on their platform, and closed out people's orders. So
they fucked retail. They fucked retail over.
Yeah, and I want to get into about the financial plumbing that occurred. So Vlad had gone on to Clubhouse to talk to Elon, and Elon basically called him out. But Vlad's explanation about why Robinhood had to do that, I guess, while it makes some logical sense, it's still morally unethical. But can you talk about that, like why Robinhood had to do what they did, which is totally illegal?
Well, I mean, their claim is basically that Citadel is. So let me back up just slightly. I'll make this pretty quick. So the business model of Robinhood is basically. The reason why people pay zero fees is Citadel is the number one market maker for Robinhood. So they pay, it's called pay for flow. So they pay for the retail order flow, which is very valuable on the market maker and hedge fund side that's dealing in those kind of things. So there are different kinds of hedge funds. I have to first point that out. There are ones that take positions and very large positions, and some of them are short, some of them felt some pain, but they're hedge funds that do a lot of different things. In the case of Citadel, it's a market maker. So their basic thing is they just want to see order flow that comes into the platform. And for the average retail investor, it makes very little, it's probably cost benefit to them actually, where they're basically paying less over the year than paying $9.99 per round trip for a commission or something like that. So Citadel takes the order, basically marks it up a couple of cents, and gives it back to the retail order, the order that went through. So that's the side of Citadel. So apparently, through all this, Citadel said, "Hey, well, all these accounts you have are margin accounts, which, by the way, is the default account. So we're going to pull that back and basically force this upon Robinhood that they have to suspend buying on those certain stocks," which is very slimy. And to me, I was like, man, you guys really shouldn't have, if you want to cause a revolution, this is exactly what you do.
Yeah.
You shouldn't have went down that path. You should have just said, hey, well, we'll just eat it, whatever. I don't know why they went down, why they tried that. It's like you just made yourself a bigger enemy, and you played into the whole mob theory that was already there, and now you just pretty much made yourself public enemy number one. And I get it, and I don't necessarily think Citadel is like an evil, terrible company.
It sounds evil.
I mean, at least
Citadel.
they're between that, well, you have to make a decision whether it's Robinhood or them. At least the broker made a deal and they passed on to the customer that they don't pay anything, but they're paying markup. Citadel is that market maker on that side. Now, whether they force, the forcible aspect of it upon Robinhood is where it gets, slippery. And why they would do that and all that stuff spawns a tremendous amount of conspiracy theories. Some I actually am like, yeah, that's like from a marketing side, as a marketing guy, I'm like, I would just not want to deal with that at all because you guys literally played into their hands exactly. You should have not went down that route. They fucked up big time. So
did they have a choice though?
Robinhood. Citadel definitely had a choice. Robinhood, when their creditors come calling and say you have to do this, yes, they do have a choice, but it's much harder. So I'm a little bit more sympathetic to Robinhood as the broker. I also, but then that being said, they're a Silicon Valley, tech startup that basically is a know-nothing bunch of idiots that don't know how to run a platform. So that's a whole different story. That said, though, they do offer a product, and I think they got taken advantage of on that side. I just think Citadel pulled some strings which they shouldn't have, and also you really shouldn't have because you just spawned even more talk, which we're talking about right now.
Yeah. And so you did talk about the big creditors kind of pulling the strings in the background, like you were the Wizard of Oz or something. And I want to talk about that widely circulated screenshot of a Redditor who claimed that he was an insider Robinhood employee who said that Sequoia and Citadel both called Robinhood to suspend trading. So what do you make of
those
that?
are two market makers, though. Yeah, Sequoia is another market maker. So yeah, they could both do it if you had, which is the truth, is when you sign up to Robinhood, you get defaulted to a margin account. So they could go down that path and say, hey, we're going to pull the margin, and then basically Robinhood's stuck looking at a deficit. And that's basically what they did to Robinhood and caused all that calamity, which is bullshit. So that's why I say is like, you guys knew, imagine having all eyes on you and you going down that path. You're just gonna inflame the situation even more. So that's why I don't understand that part of it. And frankly, like Citadel and those market makers just meant money. Like they should just eat this. That's. If I was their marketing person, I'd just say, just shut up, just eat it, go away.
Yeah. But yet there seems to be huge resistance on the market makers' parts for from losing any amount of money, right? They're willing to go through such lengths because what you've illustrated in this call is that Robinhood and these tech startups are actually relatively smaller. Like they're kind of the littler guys compared to the creditors like Sequoia and Citadel.
Correct.
So I want to zoom out from the Robinhood fiasco a little bit because it seems like we're kind of focusing on a tree, like in the context of the entire forest. And so this forest, I want to get to see it. So what's going on here? Because there was mass confusion last week, and again, we were talking about quote unquote Wall Street elites colluding and pulling the strings and working with major media outlets to kind of spin a narrative that benefits them. So what's that force? Like, who are the Wall Street elites that we're talking about? It sounds like Sequoia, Citadel, these like really huge Goliaths are the ones who are kind of the evil or the bad guys here, right?
To some extent, maybe. The CNBC narrative on that side, the fact that this is supposed to be, then you forgot one important piece to, I guess the bad guys. I would put the SEC on there too, right? Mm-hmm. The SEC often claims they're for the individual investor, claims are for the little guy, but actually most of the protections they come out with is basically to protect the interest of whether it be the banks, the market makers, or just the established people. So there is that whole thing against them, and I would include on that I have no idea what the number was. It had to be over 10. How many halts came down on just GME alone? Now that's to the upside and the downside, but I don't really see a great functioning market when you're halting it every sometimes seconds or minutes later for whatever movement's going on. So I think that's all just for those same people that we're describing. So then the question basically comes down to, is the market fair, right? We don't have to talk about should these people have lost money, gained money, yada, yada, yada. The clear thing is the playing field fair or not? And it's very hard to argue that it's very unfair.
Well, I guess on that vein, I kind of want to zoom out to the broader question. Why do we have a stock market?
Yeah, I mean...
what do you think? I think too many people trade the stock market and don't have a good answer to that question.
I mean, I traded the stock market before I found crypto, and then I found crypto, and I thought the stock market's stupid. So, not trying to sound smart or anything, but I thought, wow, that's a really dumb idea. Why would I ever do that ever again? So, I'm probably not far away from the answer there. Is just like, well, it's also a question of why is it so centralized? There's just a few players that have basic control of all these stocks. So I'm over here basically with you because I don't get it. I don't know. What's the answer? We all look around like, I think it's crypto. We're whispering over here.
Yeah, well, I mean, I think there's a plausible argument that a market for companies to raise money makes sense insofar as it allows them to invest in like productive capital as in assets to build more things or services which people want, and some method for collectivization of rewards, frankly, which could be achieved by people sharing shares of stock in productive companies, also makes sense. But it's not clear to me that the stock market that we have is in any way close to that. Kind of, as you said, it seems it's more been, and perhaps this is not unique to the stock market, but a broader representative of a broader trend. It has been, centralized in the hands of a few players, and their, particular ethical virtues or lack thereof, to me, are just less important than their position in this network. I think their position in this network is the problem that we really ought to be looking at. If you or I were Citadel, it's not clear to me that we would be acting any differently, even if we were really nice guys. It's just the way the structural incentives are set up. Probably if we were really nice guys, we would get beat out by the less nice hedge funds.
Maybe. I mean, I'm pretty tough, but yeah. Well,
I just mean in general, not you specifically.
I'm not tough, I'm stubborn. I'm stubborn, not tough. But yeah. No, I know where you're going with that. Yeah, and that's the question that I bring to all Wall Street bettors. Django, steer me if I go too far off track, by the way. So I say the Wall Street bet, I think, is an idea. And ideas are bulletproof. And, it was the idea that Occupy Wall Street wasn't enough. It was to bankrupt them. I mean, I think they definitely won a battle. Will they win the war? I don't know. So then it comes back to, on the crypto side, is like, I talk to a lot of these people, and certainly the Wall Street Bets community, which, by the way, I've talked to them on. I've had conversations with them. This is years ago, and they hated crypto. They always hated crypto. And I said, you know what? And I wasn't the bubbly, like, just buy Bitcoin. I was like, dude, you guys can trade that. It like goes up and down crazy, compared to your shitty stocks back then. Back then, I know now, stocks actually go up from like $2 to $300. Different story. Back then, stocks didn't do that. Stocks were boring as fuck. And I said, hey, dude, there's like a lot of volatility. They banned me from Wall Street. So, even today, as we sit here today, they don't allow any crypto speak. Now, I think that's unfortunate because I think a lot of the answers could be in crypto. Not all of them. I'm not a purist on that side. But to level that against me so hard, and even to this day, not to allow any crypto speak, I feel like you're just basically perpetuating the same system that you're literally playing on the rigged field that you've always played on. So that's my feeling on the whole movement. It's probably a very touchy and hot take on it, but I do respect them, but I don't know if they want to get off the rigged field.
Yeah. Is this the Reddit Wall Street Bet mods that you are talking about? Or
that's specifically, yes.
Okay.
Yep.
What's your take on the actual users there who are looking to alternatives? I mean, we've seen lots of Doge fervor going on, completely irrational, by the way, but we are seeing that. And so it seems like the narrative is slipping away from whoever the original Wall Street Bet mods were, and people are looking to crypto after the whole Robinhood fiasco went down.
Well, at least on the Telegram side, I can't speak to the Discord and that side of things. Yeah, I do think there is a tremendous amount of crossover. The leadership on that side of things is certainly not pro-crypto. Now, that said, and I actually want to take a defensive stance on their point, and not just without them here, berate them. I do understand why they've taken that stance and why they want to keep it focused, which is fine, but to just dismiss it and disacknowledge anything that crypto is also pretty bad, especially when it comes down to, so your stock that you were, worshiping basically got halted by the guys on the same turf that you knew was going to get halted, and now what? So I don't know. It's like kind of like you were running the football in the end zone and they just stopped you at like the 5-yard line and just said, "Well, we have the ball right here," and that's how it's going to happen. It's like, so I don't know. That's the way I see the rules happening. Maybe other people do or don't. Crypto has to be the answer in there somewhere. Doesn't have to be the whole answer, but it has to be part of it.
Yeah, definitely. It seems, turns out people do not like the rules changed on them as the game is in session. So
yeah. Imagine that. Yeah, they just don't they don't really like that. And I mean, I was trying to trade the GameStop play. I mean, both ways, but all the halts the market was untradeable. It was just, there's no way I want to even trade that. Like, who cares? Like, at least enough, regardless of whatever crypto it is. It goes up and down. It doesn't stop. There's no people halting it. And at least there's some discovery there. This market, whatever kind of weird thing they hide behind with protections is bullshit.
Yeah. So I want to go to the SEC conversation. Let's start speculating on what this could mean on the regulatory side, because I want to take the silver boom example in the 1980s with the Hunts brothers, where so basically price of silver was like $1.50 an ounce. Yeah, it was very low before the Hunts brothers came in, and then basically started buying up all of the physical reserves, and then driving it up to something like $49 an ounce or a little bit above that. And then suddenly the SEC comes in, crashes the party, and says, "Hey, silver trading is suspended. You can't party anymore, right? Party's over." And suddenly the price of silver plummeted, and it also bankrupted the Hunts brothers, who were trying to corner that market essentially. So, given that, and given that we, and given that we have heard the SEC talking about going after the Redditors who were possibly doing, colluding and driving up the prices artificially, quote unquote, where do you think regulation could come in and just, again, tell everyone the party's over? Because people are still holding the line on GME right now, and deep value is still in GME. Where do you think this goes? What trajectories do you see this going down?
I mean, at least from that side of things, I feel like the bigger players, SEC, that whole cabal, I guess you could call them, I think they've already served their purpose. They've diminished they've tainted and smacked down and disrupted the market enough that there's loss of confidence. I don't unfortunately don't really see a lot for GME going forward. And I think they did it specifically that way. Now, do I really think the SEC is going to go after some people on Reddit? They may try. They may try to make an example out of some people, especially some of those people on the subreddit, the moderators and stuff like that. Maybe. They'll definitely, Reddit's a U.S. company. Discord's a U.S. company. Pretty easy to subpoena all those records. Telegram, not a U.S. company. Just saying that. So a little harder to subpoena. That said, I don't know. Like, what do you got there? What do you got? You got a bunch of people that agreed on something. So what are you going to do? Like, how far are you going to go where people have a conversation and they agree on something and now all of a sudden it's collusion, which is bullshit. To go that far with any of the subreddits, even some of those people I don't like on the subreddit, moderators or such, that's still bullshit. Like, to go that far. I mean, it's just dumb. Shouldn't happen. Literally, the fact that there was a guy, I remember, this was very early on in the boat pump, or whatever you want to call it. He came on CNBC. And of all people, actually, Jim Cramer was a defender of the point. And the guy was like, I think there are foreign influences like Russia involved. And Jim Cramer literally rolled his eyes. He literally, I remember he just threw his hands back like, you are a crazy idiot, which is true. Like, get the out of here. It's a bunch of people on Reddit just ran you the over, old man. Go away. Which is pretty much how I feel. Like, it's not all Russia. It's not all some government collusion from somewhere else. You just lost. Take your loss, motherfucker, and pack it up, So, I just, on that side of things, hopefully my language is hopefully it's a PT program. But, yeah, I don't know why they go down that path in terms of the blame game. But then it also makes you think like, well, we're all sitting here in crypto. We made the right decision. And that's the only decision now. I don't really see a fair marketplace within crypto.
Right. Yeah. We were seeing an almost scripted take distributed across all of the mainstream channels, right? Like what you said about, quote, Russian disruptors. Jimmy Kimmel even said that. And, as it came out of his mouth, it didn't even seem like he believed what he was saying either. Because they're calling your Reddit basement-dwelling autist that these guys are influenced by Russia. And so what we've seen is the mask kind of slip off with, mainstream news narratives, right? It's just, somebody creates a narrative and distributes it across all of the mainstream broadcasts and then says, okay, this is what you're going to say. What you're going to say is this is foreign intervention, maybe even, quote, Russian disruptors. And those guys are public enemy number one. And, if we could categorize them as economic terrorists, then that justifies the SEC going down and investigating them for some collusion. When in fact, this was just an emergent phenomenon, which is perfectly legal, and they have no grounds to actually litigate. So
yeah, you're 100% right there.
Yeah.
I've never heard it said a better way. That was absolutely exactly the way I can't add anything to that. Perfect. Yeah.
Thank you.
That's exactly what happened. That is what's unfortunate because the media painted that way, and you're right. It's all mainstream media, even up to, help me with the guy's name. The guy, he's running for governor for California. Starts with C.H. Salome. Yeah, he went on CNBC and challenged Wapner again. The guy, he was the CEO of Virgin Galactic. I know that I always mispronounce his name, so that's why I'm going really guilty. But it's not like Charlemagne, but it looks like it. Like C.H.
Oh, Charlemagne?
Charlemagne. He's a Bitcoin guy, I sound really dumb right now saying that. But
Shamas
no, Shamas. Yeah.
Shamas Palihap. Yeah. Wow.
Yeah. Okay. See, pulls up the tongue really easily. I apologize. I can't say the motherfucker's name, but he's a cool guy, and he's like a badass. He is like the badass motherfucker of all time. And he goes on CNBC, and it's the second time he's been on there, and it's always against him and Wapner. And Wapner is like literally paid shill, like literally he might as well just stamp everything over his like ass and because he just paid shill number one. And he was like just growing, and he's like, you know what? Like, who cares? Like, he's like, you know what? These people had a movement, and they came to this conclusion, and you know what? They should be angry, and they went this way, and that's how it goes. And Wapner is like, whoa, but we need to make sure people don't get hurt. He's like, you know what, Scott? You're full of shit. You don't care about that. You just care about the people on the other side, the big players. Like, they're the ones you really care about who getting hurt. So,
yeah,
that's what it's about. Anytime any of those people, whether it be the CNBC or the SEC, march out those orders that we need to protect people, that's actually mean like we need to make sure like our big players don't get hurt.
Yeah,
or they're being hurt. Yeah.
The joke on Twitter was, some real people got hurt with the GameStop fiasco. Those people, the people who got hurt had multiple boots. So, oh my, I just butchered that joke so bad. But yeah, like you said, the people who got hurt are the people who owned multiple boots. And so, yeah, we're really worried about them. I'm just going to read over some headlines that, came across my radar in the last week, right? It's a Washington Post story called Opinion, the Good Guys in the GameStop Story. It's the hedge funds and short sellers, obviously.
Yeah,
and
imagine that.
Yeah. And what about from the Wall Street Journal? The day trading barbarians at the gate won't sack Wall Street. The barbarians, they call us. So they call us the barbarians, while at the same time the SEC is saying, well, we got to protect the little guy, and our new policy is going to protect effectively these barbarians. And then here's the kicker. Here, this is what I want to talk about, which is Wall Street Bets mod. Turns out he was called alt-right, right? They said,
Oh, they did the false flag. This is the false flag one, yeah.
Yeah. So the narrative was that Wall Street Bets Redditors are alt-right, and they are Russian disruptors, or they're even white supremacists. All of these slurs classifying something as something so horrible in the mainstream media news narrative based on completely false premises. Where do you think that? What do you think that does to people? Right?
Well,
if you're,
and you know what? As much as sometimes, and having talked to those guys, I can say I don't always agree with them, but this is like the least. This is like so much that I'm behind them, where it's on that stance that they literally, whoever attacked them, they basically knew that. So first of all, let me just back up. Yes, the Wall Street Bets community does use a lot of language that's probably not appropriate to use somewhere else. Now, that's just language they use, and it's known as this kind of, I don't want to say joke, but it's part of the culture. That said, I can see why someone from the outside would go that way, but then they definitely took it to the next extent where they basically employed a false flag attack on them to specifically take down the Reddit forum and their Discord forum, which is where it got out of control.
Those are the places where the people were talking about, right? They were just talking about these trades. They were just talking about what to buy and speculating, not hurting anyone. Like, especially not talking about like lynchings or anything to do with alt-right.
Yeah, but once they got painted as that, I mean, the unfortunate thing is Reddit and Discord both have a woke mentality, and they will continue to be, and they got pressure from that side to do some kind of act. So, I mean, it even continues today. Both Reddit and their Discord are up. However, the Discord is maxed at 500K. Now, to be props to the community to hit that is pretty amazing. But there's no way Discord's going to lift that limit on them, because to do that would be seen to be everything we just said, racist, all the things they want to walk out for that. That is a problem now for them on that side of things. And I can offer a lot of criticism against the Wall Street Bets community as a whole. But one thing I can never do is all that stuff they're doing right now. I mean, I just don't see it. And it's actually just disgusting. And to take them down over that stuff is I can't, I don't have words for that.
So I was watching this unfold in real time, and Discord took down Wall Street Bets, saying that they were propagating hate speech. And the reason for that is because I guess the word artards, I'm just going to, not curse on the show. They said that word was being spread around, and that's considered hate speech. And that's the reason why they need to take down the servers. But they failed to contextualize that, well, they call each other that. They identify as an autist, and and so that's themselves. So how, I guess it's self-hate speech. But anyway, that day, that I could stay art. I feel so weird saying that. I could stay. I could stay retarded longer than they could stay solvent. That's the kind of that's the meme that they're going for, and that's considered hate speech. Wall Street Bets on the subreddit side, they made the group private for a temporary measure until they could get a hold of the speech, I guess, that was being circulated.
Well, they had to ban they had to basically delete a ton of stuff, right?
Yeah. What do you make of that? You're right, because the hedge funds and mainstream news media are saying you can't have hate speech in your channels, and we're going to basically use that as the excuse to take you down, because what they wanted to do effectively was they wanted to take down the dissemination of sharing what kind of calls to make with each other, so that they cannot hive mind, they cannot figure out what stocks to YOLO into, so that they can't liquidate all of the hedge funds essentially.
Well, that's your false flag. That's what I've been getting. Yeah, that's a false flag attempt on a very it's a U.S. company, and all U.S. companies now, especially from Silicon Valley, have taken this very woke approach on stuff. And the second they get any, somebody hits them with, well, this is hate speech, they just take it down immediately.
Yeah.
So that's why, as I sit here today, the Telegram group that I admin blew up, because one of the probably most free speech persons on planet Earth, Paulo, created Telegram, was like, we just don't care. We don't care about what you're going to pretend that you think. We honor free speech before everything. And I respect him. And that's why people came. That's why people came to the platform, and they continue to do. Now, I don't know what the future holds, but that being said, I would be very wary to establish any platform on whether it be Reddit, Discord, or any US-based platform for that matter.
Yeah, this is a topic for another discussion, but the unilateral control over some of the biggest platforms where people just talk to each other over, such as the big social media platforms that reside in Silicon Valley, are kind of compromised. And so people are looking towards decentralized social networking. And so that's again, like you said, probably why people are all flocking to Telegram, Signal. People were trying to go to Parler, but that got shut down very quickly, because Parler was seen as the conservative Twitter alt Twitter platform for people, and so that that can't have a space on the internet. And then now these decentralized social networking projects are just popping up like mushrooms. So I want to go back to the very beginning of this interview, which was we talked about over leveraging, which is what caused the capitulation of Melvin Capital. And so again, I want to talk about the financial plumbing that happened, because from an outsider who isn't very in tune with Wall Street and how financial instruments all stack on top of each other, it looks to me like it's very similar to what happened with the subprime mortgage crisis. Leverage on top of leverage on top of leverage, and then as soon as you blow the house of cards, it all comes down. Was it something like that happened with Melvin Capital, and could it happen again?
I mean, slightly. I would say, though, it's a little bit more simpler of an explanation. That just the simple thing is, if you have 1,000 shares to short, right? That's what you should be able to short, right? If there's 1,000 shares of short of shares that are available to short, that's what you should be able to short. Now, the hedge funds suddenly, for some reason, with the brokers and their prime status, were able not to short 1,000 shares. They were able to short 1,500 shares. So, and that's why you saw short exposure exceed 100%. So that's the biggest issue, is somehow they were granted special access to short more than what was available. And I think that's been the very not transparent, the very obvious aspect of through all this is that they shouldn't have been able to short that much. So that's first of all. So I don't look at it as much of a complex situation. Of subprime was really like you had subprime baked on, CDOs and a bunch of other stuff, which was leverage on leverage of derivatives. It really wasn't a derivatives issue. It was just simple. There's no way a short should exceed 100%.
So
how do you show more that's available?
Yeah.
Like if I tell you there's 1,000 shares and you say, well, I'm going to short 1,500 shares or 2,000 shares, that shouldn't be able to happen, right? Like
but why is that?
Simple.
Why is that
because the brokers or their custodians and whoever was on the other side was willing to do that, right? Somehow they were willing to grant them that. Now, I hate to tell you that that's something that would usually never happen. Well, it actually happens all the time. It just happens this time. They got caught with their pants down and they lost $7 billion. So yeah.
So what gives them the right to grant this? I
mean, the hedge fund? The broker? The hedge fund can ask for whatever they want. Broker doesn't need to give it to them. Broker decides, well, this is all the coziness. This is the coziness of Wall Street. They say, well, been a fund that's been around for 15 years. You do all this volume, I know your mom and your sister. I married her, so it's all good. So, you know what? It's fine.
Are you saying
how it goes?
Are you saying that there's just rampant nepotism in this industry?
Yeah. Oh, 100%. Yeah, exactly. And I probably summed it up more cozy than probably should be, but yeah, there's super rampant nepotism, and it's just the idea that Wall Street knows best, and especially on that side of things. Well, let those people do what they want. They're the big money people, and yeah, they want to go and move out to 150%, 200% of the short interest, which they shouldn't be able to. Just let them do it. Yeah, that's the way it is. Yeah,
right. So, something like this that's so fragile. Obviously, it sounds like that is part of what caused the first 2008 crisis. And aren't we just due for another one? I think that this GameStop thing just is the tip of the iceberg. this can't be, the system can't be so fragile and just continue to persist.
Yeah, I mean that's the discussion where we are in the cycle, which is a whole different, probably a different discussion for a different day. Yeah, I mean, on the other side though, I don't know how it gets fixed, and I don't know how this. Whoever had confidence in the system before, how do they still have it? I don't know. I mean,
well, okay, so
it's like, well, crypto, I guess.
Yeah. Well, given that, where do you see specifically GME and I guess some of the other meme stocks like AMC and Naked and Nokia and maybe Bed Bath & Beyond and BlackBerry, you know, where do you see those stocks going? Because it does seem like one path could be the sky's the limit, or it could be this is kind of a pipe bomb and it can blow up.
Yeah, flash in a panic. Yeah, I mean, I understand the movement, I understand the belief and all that, but it's not going to last. I mean, it didn't even. I mean, the time it took us to organize having this interview, having it already expired, right?
Mm-hmm.
Jimmy went from what, 300 something, now it's what, $80. So
yeah,
I mean, it kind of goes to show how quick that those things can change, and there's kind of no coming back from that, really. I guess people think it is. I just, I look at the volume profile. I look at just the interest. I can feel it. I mean, especially now that being involved in the Telegram channel for so long, not so long, but to feel the inertia, it's over from my perspective.
Right. So, unless Elon comes out with another tweet.
Yeah, I mean, Elon can always out-muscle something. So, but I don't think he is. I really don't think so.
Mm-hmm.
So,
Elon's now on a Bitcoin. He's on a bigger, better things.
Yeah, right. We all want him over there anyway. So,
yeah.
Well, I mean, but Wall Street Bets can't talk about that though. They can't talk about it. Elon likes Bitcoin. So.
Yeah.
Well, at least the official side of things. That's not me. So, I don't know. I wish everything would have worked out, but so they put the stop to it. They put a hamp down, and I mean, it's not even subtle or anything. Like they really came down and said you can't buy anymore.
Mm-hmm. Yeah.
Which is, I mean, financial freedom is very close in my personal opinion. Speech. If you want to make a financial decision, that is part of speech. So to do that to people is it's unforgivable. And not trying to sound like a really shill for fucking crypto, but it's like, well, at least in crypto we didn't get shut down. Some people might have just we got wrecked and lost a bunch of money. Actually, I just talked to Astrike yesterday, who lost all his money shorting Bitcoin. I hope he hears this. But all that being said, it's like, well, I mean, they never stopped anything. You just lost it all. So at least you can feel better about that. So in this you're playing on someone else's field and this happens, I don't get it, you know.
Yeah, can you imagine if Coinbase or Gemini or any crypto exchange came in and just suspended trading of a coin just as demand was ramping up? And so the SEC would come down so hard on them.
Yeah.
Nothing like this could have happened, which indicates to me that the crypto market is so new that it has not been indoctrinated into, quote, the club, where the club of insiders basically collude with each other to stick it to retail.
Yeah, I think you're entirely onto it. I mean, maybe I'm a little bit less edgy on that comment, but you're on the right track. It's just I think crypto is more fair than the stock market. And when I see all these halts and all this, you know, when your broker won't even allow you to buy anything anymore, I mean, what are you going to do? Like, how can you say that's fair anymore? How? That's it. So
yeah, and unlike in crypto, your only on ramp into the stock market is through a broker.
I'm probably speaking to a choir here, but it's like we've lived in our world a long time. We know how to go through this and participate on crypto platforms. Those people don't, though.
Yeah.
They're a different kind of ape, and those, Uniswap is like, man, trying to teach them that, wow. But
Yeah.
takes a bit. So all that being said, though, I mean, there are going to be people that come over, though. I really do. And I think that's a positive part of the Telegram experience is the proximity to the crypto market is some people are going to come over. I'm not trying to think I'm like some like you're going to see the light kind of shit, but hey, I don't want to. I literally just watch Sell the Hope. I just watch them. I'm like, that's so stupid.
Yeah.
They're so dumb. I'm not going to even try and trade it. It's dumb.
Yeah, exactly.
So on the crypto side, I'm like, well, I mean, at least if I lose money, I lose it. Mark's not going to stop for me losing money. So.
Yeah, actually, the time it took me to submit an application and get it reviewed, after I received my acknowledgement in like 5 business days, the flash of the pan was already gone. And so these markets really, you're just going to be excluded if you're not already in it. And even as you're playing, you realize that this casino is completely rigged against you. And why even play it at that point? But crypto people actually have a unique advantage in this market because we have been dabbling with meme coins for the longest time, for years, ever since Dogecoin came out. And Bitcoin, to an extent, itself is a meme. And so we have a distinct advantage over the stock traders because meme stock trading just only emerged last week. And
yeah,
but
you're right. You're 100% right. Yeah.
Yeah.
Right. We're just kind of like looking at these people like, it was like us 5 years ago.
Yeah. For crypto traders coming in and understanding this meme stock game, it was pretty easy to understand in like 1 hour of analysis. Whereas if you're in Wall Street Bets, I guess, and you're trying to learn about all this DeFi stuff and how crypto works and everything, you're about 8 years behind. So you have to catch up and learn about how to play that game, which is much like provably fairer, but the learning curve is so much steeper. Unfortunately, that's the trade-off.
No, and I don't want to get too deep on this because we're probably close to the end of the podcast. But I mean, talking to some of the whether it be still exchange or exchange owners too, it's like you get to the level where it's like how much innovation crypto on that side of things, the trading side of things, has had in the last 4 years. It's immense. It's from an area that we never thought we could come from. We came. Like, it's like, well, you were high leverage, socialized losses.
Oh, you had the BitConnect thing?
Well, no, just, before that even. You had OKCoin that did socialized losses to BitMEX, which actually took it and actually a good step forward. I'm talking about their innovation. I'm not going to talk about anything else about them. Their innovation standpoint. So to see crypto go through that evolution where no other finance could ever have done that is pretty impressive.
Can you remind us about what happened with the OKCoin thing and the subsequent BitMEX innovation?
Well, I don't want to get too far. I'm just talking about the innovation in terms of, okay, so if you want people to come on and trade on your platform and you want to do 20x leverage, well, the market can go, and we're talking about 2015 here, the market can go really bad very quickly against you as an exchange, and all of a sudden your exchange is gone. So you had to institute a socialized loss program, right, where if things get really bad, even the winners take a hit. Now, OKCoin did the best. Very rarely was there any significant loss, but it was part of the game, and it was part of the process. And we've gotten to a different modified version. We're now, I'm not going to comment on the legal stuff, but BitMEX ended up like 40,000 in their 40,000 Bitcoin in their insurance fund, which is crazy. So they can almost cover any loss outside of the Southern District of New York, which is the organization you should never wish upon anybody. But the point is we had innovation in the crypto sphere that I don't think could happen anywhere else.
Do you see some of that occurring on DeFi right now? As a DeFi user yourself,
yeah. I mean, I don't want to show any project, but yeah, I mean, DeFi, I love it. I fucking love DeFi. And I always say this too. It's like Bitcoin is supposed to be the boring thing over there. That's what I call it. The boring thing over there.
The boring, non-volatile thing in the DeFi context.
It's the boring thing over there, but that's actually part of its appeal. So if anything goes bad, you go to the boring thing over there. It's like the reserve currency. Right. So DeFi is trying all these kinds of things. I give them so much credit on all that stuff. So, even something simple, I get approached quite a bit now, especially running the community and stuff. Even simple things like a limit order on Uniswap. I want to buy here and sell here. Limit order, right? Should be pretty simple. Well, Uniswap doesn't offer that, but then you have a project called Layer, and they're offering that. And I'm like, wow, okay. That's actually an improvement. And okay, tell me more, because I don't want to be sitting there waiting to click or something like that. I just want to put order here, put order there, and that's how it works, right? So, because Uniswap is a bit of a different experience. So, I don't know. But we continue to improve on multiple lines, and overall, I think the experience is net positive. Now, don't talk to any of the maxis about that, because they don't like that. But there is an innovation here. It's going on right now. I can see it.
When you refer to the maxis, you're talking about the Bitcoin maxis, right?
Yeah, and some of those people are very hard to even have any discussion with. So.
Yeah, Samson Mao had a tweet that was, saying something like, whatever, DeFi is nothing, it's just Bitcoin. And to me, that doesn't really make sense because it's completely dismissing all of the value that DeFi has brought to the whole of cryptocurrency, which is introduce a whole bunch of people who otherwise were not interested in this to come into cryptocurrency, look at it like a credible product, and then start using it. And then on the way, also for that to be the demand generation mechanism for Bitcoin.
Yeah, 100%, right? Yeah, no, 100%. And that's the thing is you got to take good with the bad. And I'm sure, not speaking for you, but I would say you're probably in agreement that when you go through those booms, right, there's a lot of people that come in that probably shouldn't be there and probably don't add a lot of value. There's probably a lot of projects that suck and are going to go away. But you know what? Then there is some people that stay and they build really cool shit.
Yeah. Is there socialized losses in DeFi or any protocol that you're aware of?
I mean, I'm not 100% sure on some of the loan parts of DIA and stuff like that. So I don't want to quite comment on that because I don't think I'm qualified to. But I mean, that being said, I think there's so many mechanisms going on there because we knew the credit market was going to come up anyways that they've expanded upon. And I mean, that's part of the process. It's not always going to be easy. It will be painful at times, but at least they're trying. And I don't know what else to say. Use a voluntary program, right? Me and you are sitting here. You might decide to do it. Maybe I might not. So that's part of it, right? We can choose to do that if we want.
Yeah, and the advantage of this is that the onboarding process is so much quicker than trying to get onboarded to exercise options on any broker. Like it's just a matter of funding your wallet, and then suddenly you could start swapping and yield farming, taking leverage out, and all of that good stuff. Taking it, buying an insurance at this point. That's a new thing.
That is too. Yeah, there's so much stuff going on. I'm happy to see it. Probably not all going to be good, but I think overall the overarching thing is it does bring people value, and those people stay and they build good stuff. So
absolutely.
And people that wouldn't otherwise be interested get interested and explore it. So I don't know what else to say to that. I think, and that's why this is debate probably too far for this podcast, but Maxi, that whole debate, there's got to be a pragmatist middle somewhere, really. Mm-hmm. I mean, that's that's it. Like, I don't understand how you can't say, even like Ethereum, yeah, I get all this stuff, but it did bring a lot of people in, and some of those people stayed, and some of those people are good. So.
Oh, right. And yeah, just to contextualize our conversation with listeners, Vix and I were both Bitcoiners back in the day, and so we're speaking on in that context where a lot of the people that we knew from those days were Bitcoin maxis. So.
Yeah.
Yeah, right.
Yeah, and you probably felt it, especially, working where you have and stuff like that, is like you feel black and stuff like that. I mean,
yeah,
I can't even imagine. Maybe there's people that were like, we can't be friends anymore, which is really weird.
Oh, yeah. So, yeah, I've lost friends on the Bitcoin side where, I made friends with them early on when it was only Bitcoin and Ethereum was a very new thing. And then I started talking about different coins, and then I found that they blocked me. so we're no longer friends. But
it's really sad. I mean, really, we all, I think we're all really actually for the same thing. It just gets so dogmatic over something like that. I just don't get it. I really don't. And to think Bitcoin's supposed to be the reserve currency, it's not supposed to do everything. That's my view.
Right.
So that being said, then I can look at, whatever project you're doing. I may not always agree with it, but I'll be like, okay, I can see at least, hopefully. I mean, I'm not some galaxy brain guy, but if you're on the trading side, I get a lot of it. For something else, maybe not. But okay, yeah, I can see that part of it, and I can acknowledge it and be respectful of it. It's just some people just kind of went off the other side and just didn't want to do that anymore. That's what's bad. That's how I feel. So.
It's also not pragmatic from a business standpoint. If you're running some sort of a hedge fund and you take a big Bitcoin maxi stance, that means a lot of these funds have capitulated, right? We've seen this. Tour de Meester's one is pretty famous. He's one of those. He's one of the people who blocked me after I vocally disagreed with Samson on certain topics.
Which, I mean, you met him.
Yeah.
I know you met. Yeah. So, which is weird. I mean, if you re-meet him in person after all this stuff, could probably come down a bit. I don't know.
In person, they're very nice people.
Yeah.
Online, it's a different story.
Yeah. No, I hear that part too. I think he actually blocked me. I think it was me, you, and some other people. Actually, it's funny because even today, before I was on a call with Phil Potter. We were talking about, I think you took a picture of me shaking hands with him.
Yeah.
Which actually became like the meme about some collusion about Twitter or Tether and Bitfinex to me and that troll piece of shit guy. Oh yeah. So I mean, you just never know where it goes. So
yeah.
I mean, but sometimes when you meet people in person, it's actually probably one of the most things where I even met it was some guy from like Chain Analysis. I think I met some guy from there that I just hated. And he was friends with George, and I was like, oh, I know, I see that. The bald head dude. He still blocks me on Twitter.
Yeah.
They'll come to me eventually. But anyway, yeah, like sometimes we meet people in person, they're chill. Sometimes, well.
Yeah.
Usually it's better in person. Yeah.
So I will want to close out this podcast with, talking about a new sentiment indicator, which is those of us who entered into crypto in the early days, realized very early on that the Federal Reserve was kind of the core that was powering some systemic corruption within the entire macroeconomic system. And now people on Wall Street Bets are kind of waking up to that reality, and they're pissed off. So there's like a new sentiment indicator, which is, okay, you want to measure how pissed off the everyday person is at just how rigged this game is, and then you could kind of price that into all of the different currencies, which I think there's going to be maybe 1 or 2 more events like the GameStop fiasco.
Yeah.
That's just going to kick up cryptocurrency demand just through the roof. And I think we could see that emerge before the end of this year, right? We've only just begun on this roller coaster ride.
Possibly. I'm not sure on that one. That's a tough question to ask. I think part of it's just my investment thesis and that I stay pretty near term, but I don't know where it ends. So that's probably a really lame answer, but yeah, I don't quite know.
Yeah, I'm seeing boomers being really bullish about Bitcoin, and that to me seems like a bullish indicator. I'll leave it at that.
Yeah. Like a top indicator you're talking about? Yeah. Or
close to top. Maybe not yet. All right. Thank you, Vix, for coming on this show. This was excellent, and we'll see you in the next one.